we have these pictures that a trader sent over to me, and we're going to go through and review them, have a look. Check it out. Let's have a look at his plan. How is this plan similar to your plan? How is this plan similar to my plan? Are there missing things? Are there really good things? Let's just take a look. Let's see what he has to say. Okay, so we have these pictures sent to Telegram. Let's just see what his updated message is. Okay, so there are 5 pictures. Boom. Picture number 1. 5 pictures. 1, 2, 3, 4, 5. Let's go and see what his updated message is. Basically, from sending me those pictures, first he said, "Can you review my trading plan?" I said, "Wonderful, send it my way. And if you're okay with it, I'll make a video response to it. That way everybody can learn from this situation," right? He said, "Yeah, that's cool. I made my plan strategy into an ebook. I have it printed and pinned up on my wall, though I'll send it to you 5 pictures of 5 pages of my consistent trading strategy. Those 5 steps happen after multi-time frame analysis. Backtesting has been done on the pair I'm currently trading," right? So he takes the time to go through that pair, and this, well, is the first picture, but he takes time to go through that pair, backtest it, and make sure he's comfortable with it, and figures out a few things, how it's performing, and then actually goes through testing it live. Nothing wrong with that. That seems completely fine. And then we have another part that we need to take into perspective. Here I basically say, do you want me to review just the plan, or how's the results acting on this plan too, right? So what are the actual results from this plan? Are there things that need to be adjusted, or just a review of the plan? Does the plan have the essential things? Does the plan have things of risk management, mindset control, and all areas of technical analysis, making sure that's up to date? You know, you're securing your profits at a systematic rate, whatever the case. Then he's like, "I'd like you to review the plan. I'm actively trading and going through another backtesting session right now, and I can update you later once I am done. I do have a backtesting trial I completed earlier on this year where I increased my account by 300% over the course of 25 days. Since the percentage is so high, I want to double back just in case I can compare both trials," right? Good information, right? To compare and contrast 2 different trading strategies or 2 different trading performances that you did. Also, I just switched from the 4-hour, 1 hour, 15 to daily 4-hour, 1 hour due to my work schedule, so I can watch my setups throughout the day instead of having to consistently watch my chart. Good thing, right? Less time away from the charts, needless hours from the chart, needless hours at the chart type thing, mainly due to my work schedule, right? So that is very good. You should always be basing your trading plan, your trading routine on like your work schedule, the priorities that you have to go do throughout the day, because those things are all definitely still important. And if you're stressing about trading, or one of those things end up stressing your trading, you're going to see it represent itself. So let's go through and have a look at what we have written here. So he basically has, what I'm going to do as well is I'm going to open up a chart here just so we can write down and get a good perspective for anything he might mean or anything like that. We don't have any charts or anything by him from the past. Yeah, nothing like that. And we're still seeing that come down. Last week was a bullish week, but like I said, when we get back to that middle area, we're going to see how price deals with being back in this range, right? And we did form another liquidity area from this. Going back up, we can collect more orders, follow through back to the downside. But anyways, back to this video. Let's just go to another pair. The markets are actually open right now. This is the first thing that says spotting a setup. Spot a trend, BOS, wave, or liquidity void. Okay, so that is a good thing. We have a general idea in our head for multiple things that we are looking for. So these do give me the idea of some type of confluence type of trading. But if you're not looking for, or depending on how you go about using all these things, if you're going to do them one at a time, or if you're going to be adding these things in confluence, obviously a trend line with a wave or liquidity. Okay, yeah, so is the BOS valid, break of structure valid, really rally candles, liquidity void, high volume, volatility, OB form? Is the liquidity void valid? Did it break structure? Did it rally? Did it create support or resistance, or overbought? Is price action clean? Does the occurrence coincide with the overall trend and bias? Very important. Is the price at point of resistance or support, or higher time frame liquidity void or overbought? Is the price in consolidation? Consolidation, no trade, right? So higher time frame markups and confluence increase the strength of the lower time frame confluences. That is a good idea to definitely add in there. On to the next picture. On to the next picture is Fibonacci. Place fib wick to wick on valid price action and continue to adjust the height of the fib to the height or low of the valid price action you are measuring. Yes, very important. Some people, I would say you don't necessarily have to do it always candle by candle, because if you do it candle by candle, it takes a lot more effort, and you're wasting time, in my opinion, every time a new high is made and then you have to go adjust it. A new high is made and you have to go adjust it. Just wait until there is a 25% low from that high or something. At least let there be some type of pullback, and then go in there and add that, and then go in and actually update the fib. Bullish price action from bottom wick to top wick, yes, in the whole swing. So you're not doing that on just a candle or anything. You're doing that on from the low to the high of the entire swing. Okay, you're not gonna choose like this to this. It's from high to low and low to high. Same thing for bearish price action from the top wick to the bottom wick, exactly. Retracement areas, the golden zones, take profit at 1, 2, 3, 4. I'm not sure exactly what those mean, 1, 2, 3, 4. But I guess you could just have a system in place for where is a take profit 1, 2, 3, 4, totally fine. Stop loss and break even are all coded into custom fib settings. Okay, so yeah. It's kind of the way I do it, I imagine, when I have like the thing titled as E1, E2, T1, T2. I know T1 is target 1, T2 is target 2. My E1, E2 are my entry areas. Middle one is called M or mid for middle, obviously. So yeah, this is all fine. When you have those fib golden areas, I know people call their golden areas, whether it's the 61.8 or whether it's going to be the 38%, or even that level of the 77.8. A lot of people go through and define what is their special level. But I would just say consistency, and based on the way that you have a certain amount of things from different ideas lined up here, I would say, just remain consistent. So far, the other important things that I see, like having a trading plan, the other important things that we should have probably got to first, like risk management, I haven't seen yet, but let's just keep going through. I'm not going to make a judgment. These are just good and bad things that I see from it. So next is to mark the zones. Mark the golden zone down, right, and adjust. Relevant lower time frame overbought areas, relevant lower time frame liquidity areas, and make sure you place your stop loss and adjust. So yes, adjust your stop loss, but never increase your stop loss. It's never a thing. When you have that first decision to place your trade, where does your stop loss go then? And in any case, you're only reducing it. You're never extending it, because extending it just hurts the soul. So why are you extending it? Why are you giving something more room when you ultimately thought at the beginning of this trade that it would never need more room, right? And apart from that, you place your take profit and adjust. So yes, that is a perfect thing to have in the plan. There is not a definite need for a take profit, I will say. But having a take profit, having a set point that you will exit the market is definitely great. At least 1 to 3 minimum. At least 1 to 3 minimum. 1 to 3 minimum is best, right? So yes, I'd say 1 to 3 is good. 1 to 2, good as well. I personally hold myself to 1 to 3, but one thing that this has to go in line with is your other overall risk management, because this right here, where you have this stop loss and the take profit, these are and kind of relevant to zones, but they are mainly relevant to risk management. So your stop loss is placed at an area. So right here you have at least 1.5 zones away. So yeah, I always say make it on the other side of the zone, or your stop loss should be in that place that if it gets hit, it proves your analysis as wrong. That is very important. My stop loss isn't at a place where I'm just comfortable losing there, or I'm willing to lose that much money. My stop loss is in a place that if it gets hit, obviously my analysis is wrong, and so I'm willing to close the trade there, right? So the other part of that goes into risk management, that this needs to be defined as a percentage, or mainly a percentage, I'd say, is the best way to look at it. Yeah, mainly a percentage, I'd say, the best way to look at it. And then same thing for the take profit. Take profit is in more regards to risk to reward, because the reward aspect of that. So whatever your stop loss is, if it's risk 1 to gain 2, then you know this is the value of 1, this is the value of 3. Analysis is key. I'll more so say risk management is key, because if you don't manage your risk well enough, none of this is going to work. All of this can work, but if you're risking 100% of your account on every trade and you have a 50% win rate, you're going to lose all your money. Next we have is entry. So we broke down, right? We have one more. I seen that one talked about risk a little. Entry. So wait for the confirmation of entry. Continue to monitor the chart and price action. Continue to develop bias and check timeframes for further confirmation. I believe this is not to be done on the entry time frame. So I'm not looking to change my bias from the entry time frame. My bias is always decided from the higher time frame, from the daily, weekly. Those time frames give me the main flow of the trend that I will then go through on the lower time frames to look for similar market structure, or a market structure that will continue the higher time frame bias. When trading on lower time frame, entry can come at any moment when near an area of value. Very true. Be ready to catch the pips. So anytime the market is not in my area of interest, or that's what I call it, my area of interest, just if price is not at any of these areas of support, or it's getting down there, until it's at that area, I'm not really interested in anything. And then even after it gets to that area, I still am waiting for one more thing, and that's the liquidity grab to happen of there before price ends up just developing, whether it's going to be a loss or whether it's going to be a win. But I'm waiting for it to get to that development stage. First I'm waiting for the trend. First I'm waiting for my trading idea. The market is just developing, doing its thing. It hits my support and resistance, and I can say, something might happen here. I've said this before, but might happen here. And then I wait for a little bit more development. Is market structure going the way that I intended to go for me to take a trade? Continue to stack confluences, harmonic candlesticks, price action, time of day. So yes, I was right. This is mainly a confluence type of trading. So yeah, you just go through and make sure. One thing that I didn't see here, which is just something about confluence trading, is that you should have a certain minimum of trading setups to occur in confluence for you to take the trade. Like normally I hold myself to at least 2 or more, because sometimes you might get, or I hold myself to at least 3 or more, because sometimes there might be 2 setups. There's always setups that you see that are good and take off, and there's always good setups that you see that fail, and always bad setups that you see that end up working out, right? So I'm not too judgmental on the whole setup, whether it's too clean or it's not. I just take my setups for what it is. As long as it set up to be an entry, it's worth taking as an entry. So yeah, those things like harmonics. The only thing I will say is, as you get more experience with all of these different things, you will find a way to filter them or reduce the things that you find unnecessary. Like personally, I don't do news because I don't think I need that in my trading for my performance, right? So enter and execute, very important stuff. Execute. That is like the secret to success in life. Journal and execute. Stick to the plan and process. I think one thing that we should do with this, I see you do have step 1, step 2, step 3. Next one is ride the chart, secure the bag, let the move play out, continue MTFA. I have no idea what that means, but continue validating the trade. Very important. Continue validating the trade, because while you're in trades, we all experience this, where the market turns against us ever so quickly, or it turns against us in a way we never thought it possible. But you have to understand, this is the market, and very, very wild things happen here, where we must continue. I always say mark up your charts, continuing to mark up your charts on the lower time frame. Just track the trend. That way you're aware if the market structure is changing, if lower lows are starting to come in on your buy trade to the upside, your long trade. Continue validating the trade and moving your stop loss up. Watch for invalidation, reversal, fake outs, liquidity grabs. Yes, look out for all those things, very important. Watch for zones and voids for respect of the areas, right? So some areas will be treated with respect, some areas will be grabbed as liquidity, right? The market sways between these two phases. I would say always stay aware of those. What phase of the market are we in? Are we trending, or are we developing new opportunities for later? Mitigate the risk, very important. Cut losses early. Break even when in doubt, or invalidation outweighs validation. Secure the bag. I think there should be more detail as to what means cut losses early. To me, cut losses early is simply one, keeping my stop loss small. So on a percentage wise and a points wise, so pips, I'd like those to be as small as possible. Sometimes it is 50 pips, sometimes it is 20, sometimes it is 10, but it ranges, but the percentage is always the same, right? I want to keep those small. That is cutting my loss early. And then apart from that, like you have here, as the trend is actually continuing and I am continuing to validate it, I can move my stop loss up. So as early as the trend goes against me and reverses, I am there for my stop loss, or I should say the stop loss is there to take me out and keep me safe, right? So those things are all important. The one thing that I don't see here is just things on really risk management. This is the most I see go into risk management, but there needs to be things for, you do have risk to reward, but what is the risk percentage that would be risked on every trade? I see here that you said you're doing it from the daily, 4 hour, 1 hour, which is all fine. I think that's great, which is fine. I think that's really great. I think you can even try to capture the weekly on there. Adding the weekly will just give you a little bit farther view ahead, more of a general view compared to what the daily has to offer. But I believe the only things that we should definitely add to this, I think this is great. The only thing that we should really add to this is clear things on mindset. What are things that we are to believe and what are things that we are not to believe, right? There's some things that I see sprinkled through here. Like analysis is key, right? We definitely have to make sure we're executing our analysis properly, right? Sometimes we don't, but we have to also understand this, that we are human beings and sometimes we approach things from emotional states that we may not be completely aware of. So sometimes we take our trades from emotional biases that we had no idea we even had. All these things are a part of life. So we do our best to manage our risk, right? There should be something here on percentage, right? And this here is just great because we do need to have something for planning our exit. Two very important things in trading is getting in the market and getting out of the market, right? These two different factors can have two traders get in at the same price and get out at different prices based on risk, based on their emotions, based on so many different things. And this right here, I will say, continue to develop the bias, check timeframes for further confirmation. Like you have there, you should only be on those timeframes that you have listed. I wouldn't say go down from the 1 hour, go down to the 5 minute, 15 minute, and go in search of opportunity, because you have to remember that your brain is such a powerful thing where if you go searching for these opportunities, you will find these opportunities. And depending on how we actually got to this place, you may not manage your risk properly. You may over risk because you're definitely looking for opportunities and things just like that. And then the other thing, apart from everything else you have, is I don't think it's necessary that all traders be confluence traders. You can just have support and resistance and other specific pieces, like the specific pieces that I have, and I'm going to put up the video here. So the things that I think are very important that must be in the trading plan, things like mindset, top of the list, top of the plan has to be mindset, because without the proper mindset, you're not going to follow those things. If you have no reason to follow those things on your plan, you're not going to follow those things on your plan. And you're going to wonder, why do I have a plan that works, but it's not working? I'm not working, right? Next is risk management, because this is a game where it's like pay to play. You have to invest money to make any type of money, right? To even have the chance to win or even have the chance to lose, you have to put money up to lose. You have to. That is trading, right? So You have to have a good idea for your risk management. What is your general risk to reward, your average risk to reward that you're taking? What is your win percentage? Know that, because that is going to help determine what your risk to reward should be on your trades, right? If you're getting 50%, you could do about risk 1 to gain 2, I believe. And apart from that, and I have this in just an idea of importance as well, priorities, is next you need those time frames. What is that higher time frame? What is that lower time frame? The candlesticks, right? Or not necessarily candlesticks, but you need some idea for what is an increasing price and what is a decreasing price. A lot of people use moving averages for this, whether it's Ichimoku, all those different all those different indicators and stuff like that. But have an idea for that. And then there's those other things that you have there. For the first one, the candlestick, an idea for increasing price or decreasing price, whether that's going to be with candlesticks, line charts. You have those in and out candles. I forgot what they call. I believe they're called like hollows or something. But you have different types of ways to read price, line charts, whatever the case. You need that. Have some type of idea for what is a good definition for when prices increase, what is a definition for price decrease. Not just a number change in price, but a visual representation that is a changed price, right? Apart from that is your tools. So what kind of tools do you have as a trader? Are you using support and resistance? Are you using horizontal lines, Fibonacci, moving averages, harmonic patterns? All those type of things need to be mapped out, and whether that's in Confluence or not, those things need to be known and written down in plan format. Next is to have some idea for structure. So what are patterns that we see here? How can we act on these patterns? What are some structures that we definitely see? Okay, we see big candles. What happens next to big candles? Next is those zones that we mentioned before, areas of interest. Definitely have your zones pre-marked out before going into the trade, because like I said, your mind is a very powerful thing. So what can happen is if I just go to the chart one time and I'm just looking for an opportunity and I'm scanning all the different time frames, my brain can find something, and my brain will most likely find a golden zone at the price of right now. Very tricky thing, but analysis, definitely a big piece of the puzzle. Those are the 3 big pieces: mindset, risk management, and technical analysis. Not technical analysis, analysis in general. That includes fundamental and technical, but I don't use fundamental, so I'm just going to do technical. So I'm just going to get technical with it. If your plan is like this too, this is really what I always compare it to, or what goes through my head when I'm looking at a trading plan or looking at old trading plans that I did. And apart from this is to have visual representation. In this video, I go through and we basically give visual representations for what everything looks like. I believe you should have that too. But basically, next to every one of these, you have some type of thing that tells you this is the visual representation of what it looks like you're supposed to be doing, and that is what you do. You try your best not to abandon the plan. You stick to the plan, and you keep going. And like I mentioned before, so I have videos in the course where we basically go through and we talk about things like just Confluence trading and getting away from the Confluence side of things, to simplify things, removing things that you just don't find useful in your trading plan, to try to simplify it and get the job quicker, easier, faster, and effortlessly. But yeah, so overall here on your trading plan, I would basically just say, I believe you need to have something here for risk management. There needs to be something here for the mindset. It can be very brief on the mindset because you do have, something big here like analysis is key. You do have enter and execute, very key things like executing, like I mentioned just before, very powerful stuff. You should be executing on your trade. I don't believe you should be taking your trades to demo, because demo trading is just very different emotionally than what it is live trading. If you're not prepared to lose real money in the markets, you're in for a roller coaster. Stick to the plan, trust the process, definitely good information. Don't hesitate. Once you get a proper confirmation, green light, take the trade. Very important. You don't go back on these trades. You don't extend the stop losses. You can extend the TP. I will not say decrease the TP. You just have to keep in fact, if you were to decrease the TP, you just need to keep in mind, what are the nearby levels? Are we targeting those levels? And mainly, what is the risk to reward that we now have? Because risk to reward is more important on my priority on my priority list than technical analysis, right? So that's all I have to say for this video, guys. Send me more messages like this. Let's go through more trading plans. If yours is better than this or yours is different, if you think yours can influence and be some good information to other traders, let me know. Keep it simple. Let's go through these trades, guys. That's all for this video, guys. I'll catch you in the next one. Peace.